Hey guys, in this video we are going to discuss about Chapter 8 Kangaroo Tail. Whenever you find that you are on the side of the majority, it's time to reform. Mark and Tevin. What is a kangaroo tail? Kangaroo tail is a distinct price pattern. It is an one candlestick that is easy to spot. Once you become familiar with this catalyst, you will see them everywhere and often at the reversal points. Kangaroo tail may prince buy signal and bullish kangaroo tails, bearish kangaroo tails, which are a selling signal. The kangaroo tail has two parts, the kangaroo body and the kangaroo tail. All the kangaroo tail are single candlestick formation. Identify the kangaroo tail is much longer than the body of the kangaroo. The best kangaroo tail have longer tails, such as kangaroo tail in figure 8.1. The longer tail suggested that the market has extended too far into the zone and is likely to reverse. The open and close. All kangaroo tails have an open and close near the extreme endpoint of the candlestick. For bearish kangaroo tails, sell signal the open and the close. The candlestick should be in the bottom third of the candlestick. See in the figure 8.2 if the open or the close is not in the bottom third of the candle, it is not a kangaroo tail. There is a simpler rule for bullish kangaroo tails. These buy signals must have open and close in the top third of the candlestick. See in figure 8.3 if the open or the close is not in the top third of the candlestick, it is not a kangaroo tail. The open and the close of the kangaroo tail should be near the extreme endpoint of the candlestick. The kangaroo tail is a reverse signal. So when we see a long kangaroo tail, the open and the close of the kangaroo tail are the extreme opposite end. We know that the market has moved too far. The kangaroo tail is a clue that the market has extended beyond the zone, perhaps a bit too far beyond the zone. Most tail, most kangaroo tails will print after surprising news. For example, kangaroo tail prints in the forex market during the tsunami in Japan in 2011. Kangaroo tails also printed in the forex market during the global financial crisis in 2008. Kangaroo tails do not only print during the extreme surprise news, however, they will often appear when the market will very excited, and these are often due to the some extremely unusual events in the world. Kangaroo tails are long. Most kangaroo tails are long candlestick. This means that the kangaroo tail will be a bit longer than the surrounding candlestick. Longer kangaroo tail have a tiny body and a longer tail. Then take a look at the kangaroo tail, the USD monthly chart in figure 8.4. The long tail is an ideal. The best kangaroo tail will be have a long tail and a very short body. Why it's important for a kangaroo tail to have a long tail? A long tail suggested that the market has gone a bit too far when testing a zone, whereas a short tail may be suggested that the market simply brush up against the zone. Remember, as a naked trader, you want to look for a trade opportunity on the zones, as you recall, are those spots on the chart where the market repeatedly reverses. A kangaroo tail is a valuable clue, a particular valuable clue when it occurs on a zone. The kangaroo tail with a very long tail suggested that the market has become extremely excited before reversing sharply. So the kangaroo tail on the zone is high probability reversal candlestick at the sharp on the market where the market has an historical reversal time and time again. Here you can see this kangaroo tail penetrated through the zone suggesting that the market became very excited when pushing price through the zone and then retreated for the close of the kangaroo tail. In figure 8.5, then it's a common kangaroo tail formation must kangaroo tail will push through the zone and then come back and close on the other side of the zone. The kangaroo tail is an catalyst that suggested that the market has gone too far and quickly reversed course. Recall that zone are those spots on the chart where the market has reverses repeatedly. Therefore, a kangaroo tail on a zone is reverse candlestick on the reversal zone. This is an important. Remember that the naked trader you are using price pattern that are clue hints about the market may be heated by trading these price pattern only on those spots on the chart where the market had repeatedly reverses. Kangaroo tail exhibited extreme market behavior. Kangaroo tail often push through a zone briefly before returning to the other side of the zone. This is a typically kangaroo tail formation and it is a good to see. It is a sign that the market has tested the zone and rejected this level. Exceptionally long kangaroo tails are wonderful as they suggested that the market had after pushing through the zone has gone too far and then settles back on the zone. Very small tails on the kangaroo tail are not ideal. A small tail suggested that the market may come back and test its zone again once again. The USD CAD daily daily chart in figure 8.6 is an extreme example is an excellent example of often happens after the small tilt kangaroo tail prints. When the market prints a long tail kangaroo tail that suggested that the market has gone too far, even though the market went through support and resistance zone. In the end, the market closed on the top of the zone. This is a hint and very strong hint that the zone will likely to hold the market. A smaller tail on the kangaroo tail does not inspire as much confidence because a half halted test of the zone suggested that the market may be decided to come back for the good test of the zone again and also during the runway market kangaroo tails may be print but small kangaroo tails are often simply weak pause in the market. See figure 8.8 and 8.9. They often have a smaller tail, will print between the significant zone. In other words, they are not a reliable signal. Kangaroo tail placement. Kangaroo tail should be a near of the previous candle. If a kangaroo tail is too far from the recent price, it may suggest that a runway market suggesting that the market is not ready to reverse. Once, way to qualifying whether a kangaroo tail is recent price action is to look at the open and the close relatively to the nearest candle. If the open and the close of the kangaroo tail are inside the easiest way to see this rule in the action to look at an example kangaroo tail on the 4-hour chart AUD NZD chart is in figure 8.10 is an ideal example. Notice the open and the close of the kangaroo tail both are inside the range of the previous candle It's important for an open and a cold close of kangaroo tail to be inside the previous candlestick range because this suggested that the market is not in a runway trending phase. Sometimes the market will print on a kangaroo tail during a very strong trend. When this occurs, you may be seem that the market is paused at a zone, but often the market eventually push beyond the zone. Entering the trade. The obvious entering trigger for the bullish kangaroo tail is a buy stop a few pips above the high of the kangaroo tail. Once the market pushes through the high of the kangaroo tail, it will trigger the buy stop, triggering an entry for a trade or bearish kangaroo tails. A similar entry works well and in a sell stop a few pips below the low of the kangaroo tail. Many traders wonder if a different entry technique may be lead to the greater profits. Specifically, some traders wish to enter the kangaroo tail after the market has retraced or traded in the wrong direction. This may seems like a good idea because the entry may be closer to the stop loss and therefore it may be reduces risk on the trade. However, a suggested buy or a sell stop entry placed in much safer strategy because it will avoid many of the losing trades. The stop loss. The stop loss for the kangaroo tail is placed on the other side of the tail, just a few pips beyond the tail. See in figure 8.17, the emergency stop loss is maximum stop loss for the trade. Emergency stop loss is the maximum loss for the kangaroo tail. Kangaroo tail trade. Idle the naked trader will be closed out of the kangaroo tail if the market is in a downtrend and move 75% towards the stop loss. Closing the trade before the stop loss is hit will reduce the average loss trade and a very desirable outcome for the naked traders. Profit targets. Chapter 11 covers exit strategies. There are many exit strategies in the chapters that are compatible with the kangaroo tail trade. One simpler way to manage the kangaroo tail trade is to take profit at the next zone. Kangaroo tail tips. There are several optimizer associated with the kangaroo tail trade. If you have the patience to wait for a to wait only for the very best kangaroo tails, watch for the following characteristics. Kangaroo tail with a very strong long tail. Kangaroo tails with much room to the left. The ideal kangaroo tail prints on an area on the chart that has often seen price action in a longer time. Bullish kangaroo tail with a closing price that is higher than the pricing opening price. The bearish kangaroo tail with the closing price is the lower than the opening price. The candlestick after the bearish kangaroo tail trade higher than the high of the kangaroo tail. The candlestick after the bearish kangaroo tail trades lower than the low of the kangaroo tail. Kangaroo tails with a greater range than the previous 10 candlestick. Kangaroo tails that triggered the buy stop or a sell stop entry on the first candlestick after the kangaroo tail. There are the several red flags, so watch out for these. Kangaroo tails with very short tails. Kangaroo tails that are do not on the zone. These are the valid kangaroo tails. Kangaroo tails precede by giant candlestick. This suggested that the market trend may be continue and the kangaroo tail may be only be pause when the market when The open and the close of the kangaroo tails are not continued by the range of the previous candlestick. Let me tell you this strategy in an easy way. Let's say market is coming in the down direction. First, it will consolidate for a while, and then there is a kangaroo tail candlestick. It is a single candlestick which will appear on the zone in an extreme point. Maybe let's say it's a demand area and it will appear little bit down in the demand area, and it is a candle in which the wick of the candle is very high, and a bullish kangaroo tail will be the same or maybe more like doji. The candlestick which will appear on the zone in the extreme zones will be like doji, in which the wick is little bit long and the volume in that candlestick, if that's a bullish kangaroo tail, there will be a pressure or the bullish volume in that candlestick, and you can place your stop below the zone, and you can put your profit target at the next zone or the next closest zone where the market is consolidating, maybe on a resistance area. Thank you for watching.